Good morning, everybody. Welcome to the Flow Show, Thursday, 23rd of May. I hope you all are doing fine and dandy this fine morning. Morning, Kate.
Hey, morning, Ryan. Morning, everybody.
So, got lots to get through today. Lots of data out this morning. Is any of it game changing? Is it not? We don't know. Let's have a look through it all and see what's been going on. We're going to start over in New Zealand. Government Orr says it's disappointing how stubborn domestic components of inflation remain. The biggest risk we run is that we don't get inflation low and stable. It says inflation persists in sectors less sensitive to the official cash rate, i.e. the interest rate, which is a bit of a warning there. I did get a bit of good news on the economic front. We had some Q1 retail sales data out from there, and retail sales coming in a positive 0.5% quarter on quarter versus minus 0.3 expected. Core sales also up a decently 0.4% versus a year ago. They were down 2.4%. That wasn't as much as the negative minus 4.1 previously. As said, we are getting stuck into the PMIs today. All the flash numbers coming out. Australia, manufacturing coming in unchanged and services dipping back. Now, one of the things I want to point out is the inflation or price components of a lot of these PMI reports that have dropped. So for Australia, apparently input prices rose at a quicker pace in the second quarter, the fastest in 6 months. That was attributed to rising cost inflation in both manufacturing and services. Consequently, both manufacturers and service providers opted to share their rising cost burdens with clients at faster rates. So that's higher input costs and higher output costs. And we know that inflation is sticky for those guys over there in Australia. Japan had its numbers out too. They saw manufacturing move into expansion 50.5, but services went backwards a little bit to 53.6. Again, on the price front, and not good news for the Bank of Japan. It says the rates of input and output prices both eased in May, preluding softer inflationary pressures across official gauges. A closer look at the sectors reveal that this is services-led, as manufacturers faced rising cost pressures in May, partly attributed to yen fluctuations, which remain an area to monitor. So it doesn't look, this evidence doesn't suggest that inflation is going to start creeping back up in May. We obviously seen softer numbers in April. Over to Europe. France, they saw manufacturing improving a tad, still in contraction, 46.7. However, services went the wrong way into contraction. So the green shoots over there, continuing manufacturing, but getting stomped all over in services. Germany was much better on both. Services beating expectations, 52.2. Manufacturing improving as well, 45.4. Services 53.9. That was the composite 52.2. 53.9 still beat expectations and higher than last month. The pan-Eurozone number there reflecting largely what we've seen across, I think it's 6 or 7 Eurozone countries that it takes into account for this one in the early numbers. Improvement or services down a little bit. That's probably France doing the damage there. Manufacturing up a little bit. Again, the price comment, shall we say, I've taken it from the Eurozone number, says that price pressures eased across midway into the second quarter. Businesses raised output prices at the slowest rate since the start of 2021. So again, seeing some softer price pressures there, which more likely to play into expectations for whether we get a July hike or not, with the June hike obviously being seemingly being a done deal. Now, what didn't go the ECB's way was the Eurozone Q1 wage growth thingy that they look at. This is the stuff that ECB's Lane and Lagarde have been pointing out that they want to see getting softer. Last quarter, that's Q4. Oh, can't get my numbers out. Q4 2023, that number came in at 4.5% year on year. A few of the banks expecting it to drop to 4%. It came out 4.7%. As has been highlighted in the report, there's a lot of comments in there looking through this number, saying that things are moderating since then, or will be moderating since then. So despite that quite high number, it looks like a lot of people, and indeed the ECB report writers, are looking through that. The Bundesbank said that German wage growth has recently been stronger than expected. German inflation is to hover at slightly higher levels in the coming months on base effects. One of those Germans, ECB Schnabel, says that if data confirms the outlook, a rate cut in June is likely. ECB's De Guindos says a prudent approach would back a 25 pip cut, and that rates rising in the coming months is not a base scenario. Kay, all that data and stuff out this morning, what's your take?
A lot to digest. And then when you wake up, it's I mean, the moves have been a bit subdued again. Okay, we have to say something that we may have because when the French PMI came out, the euro got sold a bit, but then there is a bit of hope, even though the services sector is always the ones that are watched more. But we see a bit of a revival on the manufacturing. I think the PMI's positive outlook is also linked, like a little bit like the consumer confidence, to when the prices come off a bit, when they see less pressure, they look a little more happy. So I think that is keeping the euro relatively bid on, and I would say rather on the crosses than versus the dollar, because we still have the US PMIs to come out, which can completely reverse the picture that we saw this morning for a little weaker dollar. And the second thing that I'm taking away, especially from the European data, and we have seen that across the globe, is that Q1 data are now really well in the rear view mirror, and the market wants to trade what is in front of it, and what the expectations are for the future, you know. And that seems to be now how the market reacts to everything. Q1, yeah, it is what it is. It was what it was, really. Yeah, they expect a bit of moderation on the wages. We have seen in various data points that we could see indeed a bit of moderation. So even when Lagarde and Lane mention it, are they going to take it as a really discussion point to eliminate the expectation for a July cut? I think it's still perhaps a bit early to tell. We'll know what they say when on the next ECB meeting, but looks a bit to me like we're just trading the actual numbers. And in regards to what came out in Japan, they are still struggling. The issue there is that companies traditionally don't pass all the price hikes to the public, because they are just too afraid to send the consumer back into well, a consumer recession, let's call it. And that's what's happening there. Now, just on that one, I just want to say that today we start the G7 in Stresa, right? Officially, and we may get some comments out left, right, and center from all the participants, and we know that Ueda and Suzuki, I think, as well are there. I'm not sure about Kanda. But so we may hear those guys chat a bit, and we are turning around that 1% in the 10-year JGB, and maybe we may see a bit of lines around there. And then to go back on the earlier one that you were talking about, yeah, I mean, Orr had a bit of a speech last night as well, and he said that he was really not happy about the way inflation behaved, and it's all too sticky for him. And then we got that smalls positive. We're talking about 0 point something percent increase. That looks to keep a bit under the kiwi right now. So that's a bit what's going on those European and Japanese kiwi numbers, I guess. Regarding the UK, or have you not yet spoken about the UK, or did you?
No, get on tape next.
Okay, go ahead.
Yeah. So we finally got a date for the election. A bit of a flurry in the political scene yesterday. Lots of ministers getting meetings cancelled. David Cameron, the Foreign Secretary, got turned around. He was on a flight. I can't remember where he was off to, but he got turned around. And we've got an election. And the good news is it's July the 4th, US Independence Day. So we won't have to listen to all those Yanks partying around. But it could be maybe be a bit of a hairy day, because obviously markets will be very dead at that time. So July the 4th is the date. Absolutely zero action in the pound on that announcement as expected. But we are now in a sped up, shall we say, rush to the election date in terms of election trading. All the campaigning is going to really kick off now. We're going to be getting floods of opinion polls. A lot of those opinion polls are showing Labour with a 20 plus point lead. There's been a lot of infighting going on amongst the Conservatives, Sunak's Conservatives, because this was apparently a surprise, and it's gone against what a lot of them wanted. They wanted an election in the autumn to try and better their chances. Long story short, it's all blowing up for Sunak at the moment. His party are all going in different directions. It's going to be very, very hard for him to get any sort of positive result from this. However, this is crunch time now, so it doesn't matter what people have said in by-elections and council elections and polls and whatnot previously. We're in a situation now where, for the market and for us trading it, the market will want to see a big outcome, i.e. a party taking a majority. Okay, if it doesn't take a majority, that's basically uncertainty. The market doesn't like uncertainty. So in simple terms, if you're not from the UK, that's how you need to view it, through that lens. Okay, it's going to be very hard for the Conservatives to do anything. So Labour is likely to take the government. Whether they take that, as I say, as a majority or just the largest party remains to be seen. So there's going to be different scales to look at. But as I say, we're in the thick of it now. Things are going to speed up, and probably every day we're going to get 8 different opinion polls. But that's the date, and we're off at running at last, and it's not going to come the same time as the US elections, which is hopeful.
I was just looking at that date. It's a Thursday, right? So
yeah,
we're going to have an empty market on the Thursday, and then we're going to run into the Friday. It's going to be. I think we should take those days off, mate. It may get untradeable at some stage, depending on when those results are going to come in. Of course, if it's a clear outcome, the market will probably be a little quieter. But if it's a bumpy ride, then it could be untradeable.
Yeah, I can't remember what time the polls closed.
I've got Brexit vibes, and it reminds me on the day of Brexit, where it all booted off. But of course, it's not going to be that violent.
Yeah, I don't know what time the polls close for general election. I don't know if it's 9, 10 o'clock, but we will start getting results from around midnight. There's all 10 p.m. Thanks, Gavin. We'll start getting results from round between 11 o'clock and midnight. We always get the Northern, Newcastle and Sunderland, and they have a little bit of a tradition that they race to see who posts the first results. So they'll be the first results, and then they will be coming out all through the night. I'm yet to decide whether I'm going to pull a 24-hour stint, I might stay in bed and let them get on with it. But yeah, we won't know until probably early hours of Friday how it's really been turning out. But we could get indications, obviously, all through the night. But we shall wait and see. Plenty of time till we get there. Right, moving on. Some data yesterday from the US. Existing house sales or home sales came out. And a little bit softer than expected and softer than last month. Although last month was revised up, but no big red flags for that one. On the price front, median prices came in at 407.6 thousand, which was up 5.7% over last month and up 4.8% over March 2023. So house prices still holding up very strongly over there in the US, despite a little bit of softening in the sales numbers. But as I say, no red flags from that one. Also, the NBA, that mortgage rate dipped again, again taking its cues from the general market sentiment, coming down a bit further. There's no hikes on the table, so rates can keep creeping lower. So that's going to be helpful for those with mortgages. We also got the FOMC minutes, and there's some in the market saying that they were hawkish, but we'd heard it all before. We've heard it previously. So just some of the comments. Many were uncertain about the degree of restrictiveness. Various participants were willing to tighten further if needed, and that greater inflation confidence was seen taking longer than expected. Well, as we know we've got people talking hikes. Bowman saying ready to hike. Kashkari not knowing how restrictive they are, whether they're restrictive enough. Mester likely to move her dots as well. So we've heard from Fed heads 50 times since the minutes. So not a real surprise to what was being read in there. As for rate expectations, they continue to get changed by the banks. We heard about Barclays changing their rate call from June to August for the BOE. Goldies have done the same. They've gone to August from June. Danske have also gone to August from June. But then if you read the price data or the price comments in the PMI for the UK, it, in my opinion, puts June or gives the Bank of England plenty of ammo to look to cut in June. But there you go. That's the banks for you. For the Fed, Goldies also have cut their rate forecast. They don't see Fed cutting rates at all this year, according to CEO Solomon. Nomura has pushed their Fed cut to September instead of July. I think they were originally in September and came up to July. Now they've gone back to September. Who knows? So all those are changing around again, but the market's a bit numb to all that at the moment. What we have got going on is the Chinese playing with their little toys around Taiwan and doing drills, military drills around there, and they're dropping little tidbits out via their state broadcasters saying that Taiwan's DPP government and external forces must stop seeking independence, or every provocation will be met with counterattacks, and counterattacks will become more intense. Then they also said that Chinese fighter jets that are carrying out these drills are carrying live missiles. Now, you have to remember that when it's state TV, radio, whatever, they are speaking directly to the public. It's not so much for our ears, although there's obviously the veiled warnings within that. So that's going on over around Taiwan, which isn't good news if something happens. That's about it from news front. Kay, anything from you?
No, not really. Wow, a lot of opinion pieces and things. What I found interesting yesterday, and yeah, the market was saying that those Fed minutes were hawkish, but actually the move started when Solomon said that he didn't expect any cuts this year. I've been looking back at the price action when he came up with that line. That's where actually the dollar started to go higher, and the Fed minutes just gave it the final kicker. It's a bit strange. I don't know what agenda they are on those big US bank CEOs, because we've seen Diamond being very active, Solomon being very active. Is that already a bit of political maneuvering or so, or I don't know. It's a bit strange that they have such a big opinions about everything, because I mean, no rate cuts by the CEO of Goldman Sachs. You can turn it how you want, right or wrong, but it's quite a big call, right? So yeah, I'm a little wondering what their agenda is there.
The agenda,
Well,
apart from selling financial products that move on their calls and their analysis.
perhaps, yeah, perhaps talking their book, you mean?
Well, no, they're there to sell stuff, aren't they? They're not there
Yeah, that's
to
true.
advise the government. They're there to sell
Yeah,
products. So,
yeah.
and if one comes
Yeah.
out, the other comes out.
Well, the rest of the news, we can say not a lot of news, but it is so that after all those calls in South Africa that everything is going to be resolved. We had an article yesterday, Eskom, saying that, oh, there will be no more power cuts, and now we are seeing a lot of younger voters in South Africa coming out saying like it's all a big hoax, and nothing is resolved. So that kind of explains also in parts why the rand is under pressure from yesterday and through the night. Apart from being like a technical hold down there in the low 18s, but so we are going really slowly but surely. We're getting into those elections. It's now less than a week away, and those are kind of articles that I'm keeping an eye on as well. And after all the positivity, it seems now that we are having to screw back a little bit of on all those positive expectations. That's what I thought, but I thought it would be all positivity into the elections and then see the snapback afterwards. But it's already people are already coming out saying it's not going to go as planned over there.
Yeah, absolutely. So what we've got coming up in the rest of the day, as you can see there, the Eurogroup meetings are happening as well, and that's all going to be as well part and parcel of the G7 stuff going on. We get some data out of Mexico, their bi-weekly CPI stuff dropping there, as well as GDP for Q1. So keep an eye on that for all MEX traders. From the US, those building permit numbers are just a revision from the numbers the other day. Maybe we need to keep an eye on jobless claims again in case there's any wobbles. The market calmed by that number back to 220 last week. We didn't really see any reaction to that, but certainly not the reaction we saw when it fell 19,000 or rose 19,000 the prior week to that. And then it's PMIs, obviously, in the US as well. Manufacturing looking to stay at 50, so just on that contraction expansion line there. Services looking to dip a pip on that one. But again, this could be data that we need to keep an eye on. It's very close to that trip line, shall we say, between expansion and contraction. So we'll see what comes from that. Also, remember to look at the details, which I'll highlight as normal in the tweets or in the room, just to see what's happening with jobs and prices underneath. Then we get new home sales after that. We'll see if there's any wobbles coming from that one. And then the good old Eurozone consumer confidence number down there, a number that's only been positive about 4 times in its entire history. So we'll get to see whether Europeans are less downbeat, shall we say, than they have been previously. But they're always a downbeat lot over there in Europe, as far as those numbers are concerned anyway. Right, let's get stuck into what's going on in some of the prices. I'm going to start with Euro Sterling because there's a lot of eyeballs on this one in our room as we knock around this 85 zone. It did take some of that wage number in the Eurozone to truck up a bit, but also the market Looking at the UK PMI as well, and the services number, the dip in the services number, which, okay, it was a drop, but manufacturing went into expansion by quite a good chunk. The services number did have a bit of a flyer last month. It went from 53 something to 55. Now it's gone back to 52.7. So yes, it is sounding negative, but it's still a positive number. And those price comments in there as well as again give rise for the BOE. So we've seen a bit of a push off the level here at the moment. Are we out of danger? Absolutely not. What we have done is we've managed to get through these little lows that we had. This is sort of protection of the big figure. So we've hit these a few times and bounced from there. So it's all like the as I call it, the safety net, the first safety net before we get a move down and hit the floor. So we're back above there, but unless we get above 85.30s, more so 85.50s, we're going to stay in trouble, shall we say, down here. What was interesting was that we nicked a very, very small low, 85.99.8, which doesn't sound very significant, but that happened in the minutes leading up to the German PMI, and it just gives a little indication that maybe someone's trying to throw a few low ticks in and maybe trip some stops. So if we do get a break there, we will have to see whether it's just a stop run and we're just going to flush it and then bounce back up, or whether it's something more fundamentally led and we're going to see a sustained break lower. I'm in the former camp at the moment that we're probably just looking at a stop run. So as such, I pulled my sell stop reverses on my longs, and I might think about putting those back in. But yeah, be wary if you're trading long off this one. We might get some shenanigans, but for now we've pushed off, and the levels we need to get back above 30s and 50s, and then we can probably all breathe a bit of a sigh of relief. But until then, it's still a bit nervy down here. Aussie dollar. And I warned in the room yesterday, and well, on the show here as well. We've been hitting this, bouncing off this broken area, couldn't quite get back up. The bounces were looking weaker. We knocked too many times on the door. We got a break. It was a fairly swift break down to the low 66s. But this is actually potentially a healthy move, despite this level breaking. This can be a good trend refresh. We have these sorts of moves to one extent or another. So sometimes you need to just have a little bit of a washout, let the buyers come back in, start again, and then have another go, because it has bounced reasonably strongly near that big figure. Question is, what happens up here now? 66, 40s, 50s. It was a level on the way up. It was a level on the way down. Is it going to be a level on the way up again? And this will be the decider. If we get a move quickly back above there, then I would think maybe it won't be too long till we at least go on to test these highs or the 67 level up there. And it could mean we actually go on and break them. So this number is still key for what's going on with that lot. Dollar MEX, another one I'm trading with interest. We got that CPI data. We'll have to see whether it's actually a market mover. But in the first instance, we had that confirmation on Tuesday. We had the move down, had the bounce to the zone, held the zone very nicely, textbook. Now we're just in the zone and we're holding the top of the zone. So that's that again is an important feature for the price action. We're still holding this break potentially by not getting back above there. But what's going to happen next? Don't know. We're not pushing back down towards these lows down here. So a bit of a coin toss. Now, what happens if we break up through 1670s? I'm likely to see my shorts get stopped. But if we hold it and we maintain that, then there's every chance we could head back down to the lows. I think this area here, 1657, 58, whatever you want to call it, just this little area in here, it was a bit of support on the way down, then it was a bit of resistance. So I think any buyers down here on the 52s lows are going to be protecting and coming in and trying to protect it, shall we say, that low by coming in around this area. So any dips, I'd expect it to run into a bit of trouble down there. I might decide to take a bit more off my short if I see that happening. As for everything else, I haven't looked at euro dollar for a couple of days. Let's have a look what's going on. We're still messing around in my zone. So we did have a move underneath and it did start to hold, but we're back in it now. So again, this may just be a little bit of a refresher here, but we are making lower lows and lower highs. So if we get up to, or if we can't get up to at least that high in the 60s, then maybe we are heading back lower. And then we're going to have a proper test to this 108, 107, 90 area down there. Ali, you want us to look at cable. It's not doing an awful lot, mate, but it might be sort of setting up a similar situation to the Aussie dollar. You know, we were faffing around this 127, then we got the move up. You know, we've held at one test, we've sort of held another test. So this is your pivot point, really. If we stay above there, then we've got another shot potentially at the highs. But as I say, it's looking a bit like the Aussie, where let's see if we can't even get back up to 50s, then that's going to suggest that maybe we need to have a little bit of a downside move, and that 127 on another test isn't going to hold. Really below 75.80, then maybe we're going to see a bit of a steeper pullback than that. So again, that's a little bit of a secondary area to look at should we get under 127. Want to ask if US data supports the dollar. Can we break 127? Maybe on the PMIs, on the US PMIs, if it's a strong number on those, then yeah, we could see a bit of dollar strength. But cable's in one of its moods. Okay, it's staying up here, it's staying sticky. No matter what's thrown at it, bad UK data. You know, prospects of the Bank of England maybe cutting, you know, all that sort of thing. Cable ain't going down, and that's one thing with cable you've got to watch out for. You know, even yesterday when we were seeing quite a strong dollar bid, cable dipped a little bit and got right back into 127 really quickly. So you've got to know the wind is blowing very strongly in favour of the pound in this pair at the moment. Different story in other pairs as well. Kay, do you want to take it over?
Yeah, sure, man. Yep. Yeah, I was going to have a little look at the cable too. By the way, Ryan spoke about that, but you all know about that 85 in euro sterling. I'm just playing it from a technical point of view now, and the fact that again we tried to hammer it. Well, it was a very light try, but still. The level is holding again, so just a technical play because it's just such a clean or clear. It should be at least such a clear or clean trade. Michael saying that jobless claim seems to be taking more attention. I think I'm not sure. I think it was just an excuse the other week when we saw a little bit of a weakened number. People were already trying to find excuses to sell the dollars. I mean, those jobless claims, we will need to see big divergence, Michael. I mean, to really start to impact. Of course, the short-term market may be looking at it, but then as I was saying at the time, you look at blocks of data, and then you look at where we are afterwards. We're at 108.5 in the euro dollar. We went a bit up, we went a bit down, and now we are bang smack back in the middle. Yeah, there's been a bit of dollar selling going on because the yields have come down as well. And there were some details in reports that were supportive for a bit lower yields, a bit of a lower dollar. Yeah, of course, but I mean, really, a 20K difference on a jobless claim number should not really have more importance than a PMI number, you know. I'd still say this afternoon, the PMIs, and then perhaps even that the 10-year tips auction, see how that goes a bit later, will be more of a driver. I'm not really sure about the Chicago Fed Activity Index. Never been really a mover so far, but As I say never, but unless we get, and I'm actually looking at the wrong day, am I? That Chicago thing is up. No, it is today. Yeah, I don't attach too much importance on it, barring an algo blip, perhaps, unless you know the whole bond market is following the move. It also came in a time where people were actively buying equity markets again. So it was just an accelerator of what was happening there. But I really would only start to look at claims really if we start to print really bad numbers a few weeks in a row, and then yeah, then we can actually start to speculate on what the next NFP or so numbers may be. But no, I really would not overthink it myself, at least. Yeah, this cable, and as Ryan was already saying, we're turning around levels, right? We're turning around levels. Of course, this 127.30s now has been a bit watered down, but I do have a bit of an interesting line here around 126.90, and you can look at a quick blip below, and then we took it back. So I would say 126.90 and 127.60. Those are the 265 here. Those are the two levels that I'm going to watch post those PMIs and whatever other data that we may still get. I am, and it's been a very long time that I really, well, I had a little dabble here and there on this yen, because the yen is still very much offered, right? We do have the Japanese national CPI out coming night for us. And that should, in theory, be a mover. And then combined with that, we have this G7 going on in Italy. So we should, and I would say we should expect a few comments perhaps, and then we need to watch those levels in the dollar yen. And I would say, especially if we start to get back up in the 157.65, 158, the figure zone, that is something that is going to be watched by the markets, I guess. So keep an eye on that one. Your first support is going to be not really before 155. I know people have stuff in between, like the 156 zone, for instance. But if you look at those moves here, to me, that is still not a train that I want to stand in front of. You see big spikes lower, and then it gradually takes it all back. So to me, unless it's really an intervention that is going to put pressure on those lower levels again, I'm still not in the camp of standing in front of this train, unless something changes in the dollar picture as such. If the dollar starts to really soften, then of course dollar yen will start to move a bit lower as well, in theory. But then if you look at those other yen crosses, and that's what I've been always saying as well. I mean, people tend to trade dollars, and we've had this discussion a while ago with Angela as well. But look at what those crosses are doing. They say a similar picture as the dollar, but regardless what the dollar does versus other currencies, all those yen crosses, look at this Kiwi yen, for instance, all those yen crosses. Aussie yen is less clear because the Aussie has been a little more on the defensive at times, but even there, it's up, and even if you get a little weaker data out of UK or average data out of UK, look at all those yen crosses. And that's what I want to say when you want to trade yen, because I know the retail community is dying to buy yen all the time. It's the same thing as I want to sell dollars, but you have to look to watch really and monitor what's going on in the rest of the markets if you want to trade yen, especially. And I would say the same is valid for Swiss franc, for instance. But if you look at all those yen pairs, they are bid like hell, and it's going to take really. Then coming back to what those numbers are going to do, is going to take really a very sticky CPI in Japan to start potentially turning those things around. But really, I think for now, in all honesty, if you're long yen, you not only you're going to pay funding away, but secondly, it's a pure bet on interventions, right? Because the rest, the market is telling you that even though the JGB yields are around this 1%, which I thought may actually see a little bit of reaction in the yen pairs, it is not reacting. Okay, the yen pairs are still very, very big, and so I just wanted to tell people that you don't only look at the dollar yen for what's happening, but if you want to trade the yen these days, I mean, look at what's happening in the crosses. I mean, and as I was showing here, this euro yen, we are back at 170, guys. Okay, I mean, this is not, we're not trading 160 or even not 167, 164, let alone 160. No, you're trading close to 170. So, I mean, to me, it's still very, very difficult to stand in front of this yen train. There will be a day, perhaps the second half of this year, if the Bank of Japan continues to raise and the rest of the major central banks are cutting, that there may be a natural turn. If we see some US data really turn sour, it is possible. But in the meantime, I would say, like, just look what's happening, and that is telling me that it's still very difficult to stand in front of it. So whatever I do, my little scalps here and there, my little flip flops, I usually first enter in the short yen position and then take my profits when it goes higher. And then, but I never walk naked in the rain. You know, I always put stops in there just in case we would see that intervention. Right. On the on the JGB yields, Gordon, it's going to be interesting, right? And perhaps we have to wait for Ueda to be back in Japan. We know that on prior moves closer to the 1%, that the Bank of Japan has done some unscheduled JGB buying, but they seem to be more willing to let it go this time. And I reckon we will know a bit more when those guys are back into in Japan to see what they want to do, or if for instance Ueda chats about the yen or the JGB yields in while he's in Italy. Okay, so it's a bit of an open question now what they really want to do with it. They hang on a minute. Yeah. So yeah, I mean, we need to wait and see what they want to do. Okay. No, Scott, you haven't missed it. Let's look at it. Gold. Oops, no. Right. Okay. As I said, the first supports here in gold, which we were coming back down to, but then holding again. They have now given way, 24. Well, 24 is going to be now your big resistance, right? And I was looking also a little bit of an intermediate level here at 2370s, which were traded before as well, capped and bid. We are currently trading not too far from there, 2360s. Yeah, 23.5 is your next level down here, because it's been the springboard for the last 100 bucks higher, right? So we've come to rest on it for once, had a little bounce. I'd say watch what's happening around 23.5. All right. If that goes, then we come back into this congestion zone, which is going to be this one. I think I'm going to remove in this congestion zone in the 2330s. But if you look at it a little bit from the longer term, this big channel here that broken up, retested, okay, and then we really ramped higher from there. That is now coming in around 2290. So 2290, I think everything between 22.75 and 23, 2290, 23 is going to be very important, because if ever you get a close back into that channel, we may see a much deeper correction. Now, We know that it's been driven by a lot of Asian central banks and stuff, and it seems that they have not given up, but that they at least stopped buying it for a while. You can't just buy forever, okay? And now we will have to see what's happening there. I would personally think that there is a bit more perhaps into it, unless we see again US data starting to materially weaken. Yeah, then I think we are going to find support and move higher again. But I say that there might be a bit more in it, you know. I wouldn't even rule out to move back down to 2300. But if we start to get back above 24 and hold there, this will just have been another one of those correction, yeah. And then we can go higher again. All right. Bit similar, silver. Silver finally was holding a lot better than gold for a while. Oh, I need to go on a tighter time frame. But I actually was on the right one, because you remember what I spoke about, this the 30.5, 30, 50, 60, the long-term 50% of whatever happened between 2011 and 2020 comes in around 30, 50, 30, 60. Some people have it at 70, but I don't think that 10 cents matter much in silver. And we are right there, okay? We are right there. Prior highs are just around that 30 level, okay? So 30 is going to be a bit psychological. I would say 29.80, 30 the figure. That's going to be a bit of a psychological level. If we get below, then we can see a deeper correction. Where that deeper correction can take us, I wouldn't think we go all the way back to 26s or so. That would be really ideal to reload. But I think anywhere 28.5. 28.5 is a zone where I'm going to get interested to start to reload whatever I sold on the way up, the add-ons. I think people saw my tweet perhaps on as well, that we took some decent profits on the way up. So 28.5 is where I will start to get interested again. And really, yeah, this one. Sometimes we miss trades. This one is a miss. This one is a big miss. I really thought that Rand may see more positiveness, and I was waiting actually for a bit of a break sub 18 and then buy it, but we never got it. So it held in the 18 figure 10 zone, and we already shooting higher again. Any retest of those lower levels, perhaps even here in the 18.25 to 18.20 zone, may already find bias. As I said, I still think it's one big buy the rumor and a potential sell the fact of the rent coming up on that election, and I'm still not having changed my view. I'm looking at the time. I'm going to leave it there. Perhaps tomorrow I'll show the evolution of some Swiss pairs again, but I think for today that's okay.
Yeah, thank you very much, mate. Just want to go back quickly just to add to the gold discussion. Keep an eye on copper. I think that's one of the reasons why we're seeing metals, the gold, silver, acting maybe in a bit of sympathy, because that's had a big old rally and it's having a big old washout as well. Again, the gold move, commodity move might be a bit part why Aussie dollar came off as well, because if you look at the other dollar pairs, Kiwi dollar, cable as mentioned, they're holding up pretty well. So yeah, it looks like there's a lot of when you get big moves in commodities and sharp moves in things like gold, then you're going to see commodity FX jumping in alongside it as well. So yeah, just keep an eye on that copper mark in our chat room. Has got some good commentary on that. And we'll leave it there for today. Thank you very much, everybody. Trade safe. Have a great Thursday, and we'll see you all bright and breezy tomorrow. Thanks a lot.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.